This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. We are across Bloomberg platforms. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. We were up on the equity trade. Now we are down.
Yeah. I thought today was going to be a day when we saw some of the indexes regain what they lost yesterday. That's what it was looking like earlier in the morning. Not so fast, say traders.
No, exactly. But if you take a look at the S&P 500, go inside that average. Yes, it is down today, but you've got more than 300 names actually to the upside. So you go inside the internals and you do see a little bit more of a risk on trade. Having said that, there's a lot going on, and we've been watching also Micron shares ahead of their earnings. We've been talking all week. All of our market guests have been saying this is going to be an important indicator of that AI-driven frenzy, the trade that we've been seeing for some time. Right now, shares of Micron, they're down about 3.5%.
Well, let's zoom out and look at the SOX. The SOX down about 2% after yesterday's decline. All eyes, though, as you mentioned, on Micron. We'll be bringing those numbers to you live during our simulcast just after the market closed. Also on our radar today, WTI dipping below $70 a barrel. Lowest since the war began.
Yeah, it definitely has pulled back, and it's kind of sitting at that level. All right, so that's our broad market backdrop. Ahead this hour, though, we want to really focus on what's going on in the nation's capital. We've got seemingly tensions between the GOP and the president. So we want to get into what's going on, what it means for congressional actions or lack thereof, and for companies in the trade, because it's definitely playing out today.
And speaking of presidential actions, homebuilder stocks are rallying. We're going to explain. We got Katie Hubbard, the president of U.S. Capital Markets over at Walton Global. She's going to be joining us to give us an idea of what homebuilders are telling her, because they're the ones who sell the land to the home builders.
Yeah, exactly. And then we mentioned oil dipping below 70 as more ships are crossing the Strait of Hormuz after peace talks. The road ahead for oil, not so fast. The president's not happy that
he's not happy about
at the pump are not coming down.
But markets are markets, right?
Markets are market, and we have a great market guest to kind of tie it all together. Let's get you going, though, with a check on the trade on this Wednesday. Amy Morris is in for Charlie Pellet. Hey, Amy.
Hey, Carol. Brent oil fell below $75 for the first time since the Iran war began, as more tankers openly crossed the Strait of Hormuz, while the U.S. and Iran signal progress toward ending the war. Oil prices now down about 40% from their high during the peak of the conflict. As we check oil prices now, WTI now topping $70 a barrel. Brent crude not quite $74 a barrel. A drop in chip makers ahead of Micron's earnings report weighing on the stock market. Micron shares about 3.5% lower. We do check those markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. NASDAQ down 0.4%. The Dow up 0.25%. The 10-year Treasury yield at 4.4% and the 2-year yield at 4.14%. SpaceX sold $25 billion of investment-grade bonds, replacing costly debt that had helped finance Elon Musk's 2022 acquisition of X and expensive loans and bonds issued by XAI. SpaceX must now prove that it can balance its different business models and eventually turn that AI business into a boom, as SpaceX shares now less than 1% lower. Hertz shares tumbled the most in 2 years after that company warned profit this quarter is trending toward the low end of expectations. Hertz said in a regulatory filing that the softness in the used car market will raise its depreciation costs. Shares of Hertz are now 33% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek.
All right, Amy Morris, thank you so much. Well, it looks like trouble on the home front when it comes to the GOP, or some might say it seems like that. This is coming after President Trump canceled plans to sign a bipartisan bill aimed at lowering housing costs and increasing supply until Congress approves voting restrictions.
All right, well, it does come on top of primary results that we got late yesterday. That show 3 candidates endorsed by Mayor Zohran Mamdani here in New York swept to victory in Democratic congressional primaries, showing that the coalition which powered the New York City mayor, to a surprising victory last year, is actually gaining strength.
Yeah, it's been interesting watching these primaries over the last few months here. Hey, let's head to the nation's capital and to the Bloomberg News Washington, D.C. bureau and to Bloomberg News Washington, D.C. Deputy Bureau Chief. She is Laura Davison. Laura, good to have you here with Tim and me. First up, the podium. My understanding, I was listening to Joe Matthew on BOP, was all set up for the signing at the Capitol. Everything was ready, it seemed, for President Trump to sign the 21st Century Road to Housing Act. And then he scrapped the plans to do so, and he did put a post out on social. Here's what he had to say. Today's Housing News Conference and signing is hereby canceled until such time as we pass the desperately needed Save America Act, which I, the president, consider to be a national emergency. So again, that came out earlier this morning. Laura, what the heck is going on?
This is one of those days in Washington that political reporters live for. We had a cage match on the White House lawn a few weeks ago. Today, you have the makings of a political cage match going down right now in the Capitol building, where senators are meeting with the president right now. You have Trump, who essentially pulled the rug out from under them on this housing bill. This is a bill that they had been working on for months, had bipartisan agreement, passed both chambers with flying colors, and was supposed to be what Republicans were going to take to voters and say, hey, look, here's how we're addressing affordability concerns before the midterms. Trump said, hold on, wait a minute, I'm not going to sign it. I want you U.S. senators to pass this election security bill that he's been pushing for months. The Senate does not have any appetite for that, and so he is throwing yet another roadblock. This comes after just a string of things that have really made Senate Republicans mad at the president of their own party. They're mad about the Iran war. They're mad about the deal that he cut to end the war. They think that it gives away too much to Iran. They're upset that he last week pulled out the rug from under them about Jay Clayton to be the director of national intelligence, having Bill Pulte, a loyalist who they think is too close to the president in that role, and in addition that a lot of them are going to be running for re-election in an environment where the economy is not great and Trump is not doing much to help them on that front. So this is just kind of a moment of really the lowest of low approval between the president and Senate Republicans, and tensions are on their highest.
Do Senate Republicans have any power against the president?
This is the big question. We have seen Congress really over the past, year and a half of Trump's second term, really give away a lot of their power and decline to put checks on the president. We did see a shift in that yesterday. We saw the Senate, rebuke Trump over Iran. They voted to, sort of limit war powers there. This is, however, largely symbolic. There's not a lot that they can do because the fighting has largely stopped and, need to pass the House. Trump would actually have to sign that. But what we are seeing is that when it comes to things like power of the purse, where Congress does have leverage, they are the ones responsible for appropriating and signing those spending bills, that they are not inclined to give Trump what he wants. Of course, Trump still has a vast, executive power. He's able to legislate how he wants. He's going to go to social media. He's going to pick these fights. So Republicans really have to pick their spots, to figure out how to needle the president best.
All right. So are they right now up on Capitol Hill meeting the president and GOP leaders?
Yes. Yeah. So Trump is in this room with all 50 some odd Republican senators and this is a weekly meeting that Republicans have. They sit down, they talk about issues of the day. Trump is there, meeting with them. Early reports from this room suggest that there is, there's already tense conversations happening. Bill Cassidy, a Republican from Louisiana, who Trump actually campaigned against and helped, lose his primary race a couple months ago. So he has a big beef with the president, has been speaking in the room and attacking the president for his role in Iran and other things. So this is, very much a family meeting here.
Family meeting or family intervention? I'm just kind of wondering how this is playing out. Joe Matthew of Balance of Power, I think, saying earlier, to be a fly on the wall there. Hey, upon arriving at the Capitol, President Trump spoke very briefly to reporters, and he said that every election is important and that, quote, we are doing really well. I mean, the primaries yesterday, the primaries that we've been seeing as of late, we obviously are focused on what happened in New York City, but is it indicating that there is backing of President Trump and the GOP, or are Republicans scared, and rightfully so, ahead of the midterms?
We're seeing really a mixed record for the president. There have been, several scenarios where he has backed primary challengers to incumbents and won. There's also some examples, in Iowa and elsewhere where he backed certain candidates who did not go ahead and win their primaries to be governor or some other federal seats as well. But you can see this is bothering the president. He took to Truth Social this morning and noted that, that the media is giving credit because to Zohran Mamdani, the New York City mayor, for having some of his handpicked candidates win in New York. And
that honeymoon is over. Don't you remember that meeting with the New York City mayor and President Trump? He seemed to be kind of in awe, President Trump, that is.
Yeah, back last November, it was sort of this meeting. We were expecting fireworks, and we didn't get any of that. We got sort of this, buddy show in the Oval Office. But now Trump is clearly at least jealous of what Mamdani was able to do last night, saying he wasn't getting any credit for his own record on that same front.
Yeah, all of this points to what happens in just a few months with the midterms. And, what happened in New York City, apart from that, what are Republicans doing in their own districts ahead of the midterms to try to get the support of those who do support a president who remains popular with a base, but at the same time, it seems to be struggling to deliver on that affordability message?
They're trying to kind of eke out a message on the economy where they can. So they're hoping that gas prices, that are falling will continue to fall. They're pointing to the tax cuts from last year. However, people didn't see as big of refunds or big of cuts as they were expecting in some cases because of that. And, they were hoping to have this housing bill, but it's unclear if this will become law. This is going to be in limbo for the next several days as Republicans and Trump figure it out. Yeah,
we're going to talk a bit more about housing with Katie Hubbard over at Walton Global. We'll do that in our 220 block. Hey, Laura, I'm glad you're excited. Glad you're having fun because it's an interesting
Cage match,
day.
She says.
Cage match. I like that. Laura Davison, she's Bloomberg News Washington, D.C. Bureau, Deputy Bureau Chief. She is there, of course, in the nation's capital. We should get to the markets. Yeah,
this is stocks fall ahead of Micron's earnings after the close and as oil slides. Back with us, Mike Contopoulos, head of multi-asset macro investing at Janus Henderson Investors. The firm has $20 billion in assets under management. He joins us from Westchester. I know you're watching the macro. We're going to get to the macro in just a second, but I want to start with a little bit of the micro because sometimes companies get so big and people tell us there's an event to watch. And for the last few days, they've been pointing to Micron after the bell. Does that make or break at least some part of this cycle?
I think that we've seen over time, Tim, that one company typically doesn't make or break a cycle. I do think it can have a psychological effect on the markets for sure. I think the more important data point that I'll be watching is just how inflation ultimately evolves over the next couple months and the Fed's reaction function to that. Obviously, earnings are going to be really, really important, particularly amongst the chip makers and the hyperscalers, and whether or not all this investment is going to continue. That matters. It's not that it doesn't. And Micron is going to be a bellwether for that. But I don't think it's the only thing that matters by any stretch of the imagination. And typically these one-off events have shorter term consequences to traders versus, more macro themes like inflation or interest rates or Fed action that have, a longer term impact to investors. But listen, earnings are what matters to equity investors, and any sort of insight into earnings growth, margins, et cetera, is going to be really, really important over the next couple months, I think.
Hey, Mike, it's always been the Fed's preferred read on inflation, no doubt about it. But the new Fed chair, when he was going through his nomination process earlier this year, he said the data that's being used to judge inflation is quite imperfect. And this was at a Senate confirmation hearing. He said if confirmed, he'd seek out new understanding and new data sources to see what's really the inflation rate in the economy. It does feel like, with his focus groups and plans and committees, that he is looking for a better way to measure this. Should we be getting ready for him to find data that will give him room to actually cut rates, which is something we know President Trump would really like to see?
No, I'm not too worried about that, to be honest with you. He obviously has set up all these task forces to look at various parts of the economy and different, factors that will help guide, Fed policy. But at the end of the day, this is a committee, and you have a lot of data out there that kind of points in the same direction. And I think it's going to be true to sort of what's going on with the economy. Clearly, there are some aspects to survey data that need to be refined embittered. It is an old system, and I don't disagree entirely with Chair Warsh that he has to shake things up a little bit. But no, I don't think there's going to be a lot of data mining and trying to make a case for cutting interest rates. And here's the reason why: because at the end of the day, President Trump wants lower borrowing rates. And that doesn't just extend at the front end of the curve, but out the curve as well, particularly as it relates to mortgages. And if you cut rates into an economy that has 3.5%, or 4% inflation, if you cut rates into an earnings environment where U.S. earnings growth is 15, 18, 20%, if you cut rates into an environment where by all measures, employment is pretty much full, rates will go higher. 5-year, 10-year, 20-year, 30-year rates will go up, and that defeats the purpose of what the administration wants to do, as the bond vigilantes will come out and punish the rate market. So I think Chair Warsh knows this, and I think his colleagues at the Fed are going to tread carefully.
How are you watching oil markets today? Brent falling below $75, WTI falling below $70. How does that fit into this part of the conversation, Mike?
It certainly helps the inflation picture on the margins. There's no doubt about that. We've been in the camp that inflation is kind of here to stay. You're going to have persistent global shocks because of deglobalization. You hear so much about, these transitory shocks, whether it's, COVID, tariffs, the Ukrainian war, and what that did with European energy prices, utility prices, et cetera. And then you had the Iranian war. You have all of these sort of one-off shocks, but they're all a function of a world in which we live, where you have more deglobalization rather than globalization. And you're just seeing basically the other side of the Iranian war now, and oil prices falling should be good for headline inflation. But the core measure of inflation is still going up, not down. It bottomed in April of 2025. That's now over 12 months ago. If you look at trimmed mean, if you look at sticky inflation, if you look at sort of the secular trend of inflation, all of these things point to higher inflation rather than lower inflation, certainly relative to consensus. Lower oil prices helps over the near term, but it doesn't change necessarily the longer term picture on inflation and what that means for rates and Fed policy.
Hey, one thing I want to ask you, Mike, and something that you guys can certainly see over at Janus, you as head of multi-asset macro investing, fixed income, global growth, equities, you see a lot. Where are the flows going? Where are investors looking to commit money at this point? Where are they pulling out, maybe looking to reallocate?
Yeah, I think it's been very clear that during these shocks, the initial flow of capital is to speculation, which is ironic, because what should happen during shocks is you should see liquidity dry up and speculation actually shrink. But it's been just the opposite over the last year and a half or so, both around the comeback from tariffs and then the comeback from the Iranian war. And so a lot of the capital went to technology. Last year it was the hyperscalers in the 2 months following tariffs. This year it's been more the chips players. But in between those periods of time, you had massive broadening. And I think that broadening is going to continue. I think as the global economy continues to be resilient, as earnings growth continues to accelerate in developed international, Europe, Japan, and emerging markets, ex-China and China, as well as within the United States, as you have strong earnings growth, I think you should start to see a broadening of markets, and you'll see actually allocations, client dollars move from speculation, move from chips, and go more towards the rest of the world's markets.
Mike, really appreciate you weighing in. Mike Contopoulos, head of multi-asset macro investing at Janus Henderson Investors, joining us from Westchester. Hey, a bunch of headlines crossing the Bloomberg terminal as we speak. One has to do with former Tricolor Holdings Chief Operating Officer David Goodgame telling a judge that he will plead guilty to multiple criminal counts stemming from the used car dealer and lender's collapse last year. That was a hearing today in federal court in New York that he would enter the plea. So the decision leaving Tricolor founder Daniel Chu alone facing charges that he orchestrated a systemic fraud of banks that provided the company with so-called warehouse loans. We're going to continue tracking that. We've got some stocks on the move. Freddie Mac extending gains to session highs, and we have Tesla shares extending declines to 2% at session lows. A lot going on in the market. Up next, we talk housing.
It's 2:21 on Wall Street. I'm Amy Morris. This just crossing the Bloomberg terminal now. Google poised to lose 2 more AI staffers to Anthropic. The exit's adding to a series of high-profile departures that risk undercutting Google's position in AI. A drop in chip makers ahead of Micron's earnings report is weighing on the stock market, and we check those markets for you all day long here at Bloomberg. The S&P 500's flat. NASDAQ down 0.2%. The Dow is up 0.4%. 10-year Treasury yield at 4.4% and the 2-year yield at 4.13%. WTI crude oil is now at $70 a barrel. Brent crude is approaching $74 a barrel. Cerberus Systems shares plunged in early trading after that company gave an annual sales forecast disappointing investors. CEO Andrew Feldman says the biggest challenge for Cerberus right now is getting enough data center space. Cerberus shares down 17%. May new home sales fell more than 7% month over month to 580,000, below all estimates. They had forecast between 598,000 to 655,000. And the meme stock crowd now rallying behind Wendy's. The fast food chain shares, which had been on a steady downward slide for about 3 years, now surging as much as 42%. That happened this morning and it triggered a volatility halt. There was no news announcement behind it, just a post on social media saying, quote, "Save Wendy's before it's too late." That post was later taken down. Shares of Wendy's now 31% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Masser and Tim Stinovec.
All right. So appreciate it, Amy Morris. Just to rehash, because this has certainly caught our attention. I mean, we are seeing high-profile executives continue to leave Google, and you just, as Amy mentioned, 2 leading AI researchers at Alphabet's Google planning to leave for rival Anthropic, according to folks familiar, and that adds to a series of high-profile departures that risk undercutting the search giant's position in AI. Some of it has to do, if you read inside this story, some of it maybe has to do with money and opportunities elsewhere, but some of it also, from our reporting, has to do with maybe some concerns about priorities inside of Alphabet.
And as we mentioned, the reason why we're closely following this is because it does follow recent other people moves to these, I'm not calling them startups, but these, trillion-dollar privately valued companies that we do expect to go public soon. Nobel laureate John Jumper headed to Anthropic. We learned that late last week and over the weekend. Star researcher Noam Shazir is going to OpenAI. As you recall, that rattled investors on Monday and cast new doubt on Google's ability to compete when it comes to build these better models.
I mean, there's definitely a talent war when it comes to
we saw
AI.
with Apple losing a lot to Facebook last year. And that, I mean, those literally tens of millions of dollars.
Yeah, I mean, this is what's interesting. The pressure on Google from these 2 startups, which are on the cusp, as Tim mentioned, of going public. I mean, offering even well-heeled employees at big tech firms the chance at a rare payday by signing on before an IPO. We know it's often, you think about it, you'll get an MBA or something, like, go find a company that's about to go public, right? It's an opportunity to be kind of there on the early or in the early days to make money. I should say, according to our reporting, in at least one case, a Google departure also appeared to be preceded by shifting priorities over how to allocate precious computing resources, an issue that has prompted other employees to leave the company entirely. So the war is on.
The war is on, and a lot of new wealth is likely to be created if these companies do go public. And what are all those people going to need? They're going to need homes.
Yeah, they are, which is... What a lovely segue.
Well, there was a great article in the Journal earlier this week about the founder of a big company selling his real estate portfolio for literally worth hundreds of millions of dollars because he thinks so much money is going to come from these startups.
I love
and
it.
The people who are building wealth at these startups.
Well, I got to say, you are seeing homebuilders actually higher today by about 6.2%. The whole group rallying. This is after President Trump canceled plans to sign a bipartisan bill aimed at lowering housing costs and increasing supply. So really escalating his feud with Republicans in the Senate. We talked about that earlier. What's interesting, and probably why you're seeing the sector rally, is that the bill included a provision that would restrict institutional investors from buying single-family homes. It's something that President Trump has championed with an executive order earlier this year, but you talk to folks in the industry and they have some very strong views on that.
One of those people in the industry is Katie Hubbard. She's president of U.S. Capital Markets at Walton Global. It's the privately owned asset and real estate investment company, $4.4 billion of land assets under management and administration on behalf of investors in more than 90 countries. Currently, 85,000 acres of land under ownership and management throughout North America, and about 90% of that is here in the U.S. Katie, good to have you on the program. I want to remind everybody where you play in when it comes to these home builders and when it comes to land. You basically have the land and you hold on to it for home builders for when they want to buy it and then build those homes. So you have a great read on what they're thinking. What are they telling you right now? What are you hearing from them?
Yeah, well, as you saw, new home sales came out lower than expected at 580,000, down 7%. But what we're actually seeing is that builders are more bullish than those headlines are suggesting. Our builder clients, where we're financing land to keep it off balance sheet, are aggressively buying finished lots today.
So they're buying land but not building?
Well, so they're buying the land that's ready to build. That suggests that they're very, they're more bullish than what you're seeing there. What is happening is that they are being more disciplined. They're starting less homes and they're going more towards build to order and wanting to build less spec homes, which is why you're seeing starts down as well. But they're definitely bullish, and you see that with the with how they're buying finished lots.
Well,
we're closing on a deal a week.
Katie, that sounds a little K-shaped to me, with the idea that, if they're not building spec, but they're building to order, it seems a little higher end. And there are certainly, across the spectrum, home builders play in different areas. Is it fair to say that the higher end home builders are the ones who are more active right now?
That's a great point, Tim. So that's exactly what we're seeing. So the higher end new homes coming in at $950,000 are doing extremely well. People are paying cash, and they also have strong personal balance sheets. On the other side, affordability is really plaguing the entry level buyer, and it's very regionalized. The people in coastal cities where you have high land prices, high regulation, it's harder to build. Those entry-level homes are just pricing people out, and so they're going into more affordable markets.
So basically they're building for a sure thing.
Yes. So the builders that have been able to, like Lennar, like D.R. Horton, you see them, they're adjusting, they're building smaller homes, they're offering financing incentives. They're doing very well because they're delivering that affordability in markets where people can still afford that monthly payment. But there are 268 cities in the U.S. where the entry-level house is now $1 million. Most of those are in California and New York, and that's just pricing people out. Not that people don't want to live there, they just can't afford it.
Great if you own it, but great if you don't. I mean, not so great if you don't.
Yeah.
Hey, one of the things I want to ask you, Katie, is President Trump canceling plans to sign that bipartisan bill aimed at lowering housing costs and increasing supply, basically looking to make housing more affordable. This has to do with politics, but having said that, remind us about your view on this and the impact it may have on the housing market from your vantage point. And I say that having been at Milken in May and doing a real estate panel with home builders and those in the industry, maybe not so keen on this and having limitations for investors to be involved. What's your view and how this might impact the housing market?
Yeah, I mean, it's definitely good to see both sides of the aisle address the supply issue. We really are undersupplied, but at the federal level, it's hard to really make a big impact on supply. It's really more at the local level where you can affect supply through improved, permitting, faster zoning, and deregulation. So that's, it's still up in the air of how it's going to land. But institutional investors right now own less than 1% of homes. At the peak in 2022, they owned 3% of homes. So what we're waiting for is there's a lot of build-to-rent developers that are on the sidelines waiting to see how this shakes out to get back in and unlock some capital, which will help the supply problem as well.
Is anything on the local level that you mentioned, the permitting or anything, at least when it comes to the way people feel about zoning on the local level, is that happening in any part of the country right now?
Well, I mean, especially this bill, it could help with environmental deregulation. There's also some provisions currently in it that would help with smaller banks improve their lending capabilities, also deregulating manufactured housing. So at the local level, we really need federal funding to incentivize local governments to speed up zoning. Because if you spend 3 to 5 years trying to get land zoned for the approvals, that alone adds thousands of dollars per house. That's a more significant impact to housing affordability than a 50 basis point rate cut's going to be.
So bottom line, with the president is trying to sign this bill, that's not really necessarily going to make housing lower. I mean, we are always reminded it's, location, location, location. It's all specific on a state, a city, between zoning and so on and so forth. That's really what comes down to it in terms of supply and pricing, whatever the economy bears, right?
That's right. Anything that we can do to make mortgages more available and improve affordability helps, but that's not really going to fix the supply issue at the national level. Like you said, Carol, it's local.
I feel like we have this conversation whenever we're talking. Like, you can do whatever you want at the federal level, but unless those laws, regulations, environmental rules, zoning, and you get people to say, we are okay, and by people I mean voters, we are okay with increasing density in certain parts, you're not going to move forward with fixing the problem in this country.
Exactly. And that's why you continue to see the South, Texas, Florida, the Carolinas continue to dominate in new homes because they have less regulation. They still have, affordable markets where it's the cities and the locations that have great land parcels, but just too much regulation to make it worth the builder's time. It adds years of cost and it's just too expensive.
Katie, in a lot of parts of California, they seem to be making a dent with this idea of the ADUs, the accessory dwelling units, and taking a lot and adding a 2 or 3 bedroom home. In some cases, you can add a pretty big home depending on the lot size. Is that actually making a dent?
We are starting to see some additional developers who were not able to make deals pencil before. Now they're coming back to the table and saying, okay, if I can improve density myself through ADUs, it definitely could help.
That's wild. Like, you see stuff on social about that too. And it's just amazing, like the homes being put everywhere and anywhere. I am curious, Katie, from the clients that you guys talk to, the home builders, what is top of mind for them? Is it the rate environment? Is it policy, legislation? Is it labor costs? Is it material costs? What is it also?
Yeah, at the local level, definitely if we could get some type of incentives for local municipalities to either approve or deny zoning in 90 or 120 days without dragging it out, that would help. Certainly, so shortening that time, which reduces costs and reduces their carrying costs on their land assets. They're also really continuing to adjust the type of homes, building smaller homes and building what product people are looking for. It's not that people are going and looking and shopping for incentives. They're really shopping for an improved quality of life at a payment that they can afford. And so builders that are delivering that and buying down the mortgage rates are still doing well, as evidenced by Lennar recently is still building and delivering 20,000 homes a quarter, which is it's incredible, but they're doing it on purpose, eating into their margins to deliver that volume.
Interesting. All right. Listen, perfect person to talk to on this Wednesday. Katie, thanks so much. Have a good rest of the week. Katie Hubbard, president of U.S. Capital Markets at Walton Global, joining us. All right. We are headed for a break. We've been watching oil prices on this Wednesday. They've been slipping. We saw WTI go below $70 a barrel, and this is as the Strait of Hormuz seems to be opening up.
It does. In the meantime, we are seeing the S&P 500 move into the green, just up about 0.1%. The NASDAQ composite still down 0.2%. Kind of all that matters is after the bell and what we hear from Micron. We'll be counting down to that too.
It's a big deal, and we will be all over it. Stick around. We continue in just a moment.
It's 2:40 on Wall Street. I'm Amy Morris. Brent oil fell below $75 for the first time since the war with Iran began, as more tankers openly crossed the Strait of Hormuz. The U.S. and Iran signaling progress toward ending the war. Oil prices now down about 40% from their high during the peak of the conflict. We check those oil prices for you now. WTI been holding steady pretty much all day long, near $70 a barrel. Brent crude now less than $74 a barrel. And markets are mixed ahead of Micron's earnings after the closing bell. We check those markets for you all day long here at Bloomberg. The S&P 500 little changed on the downside. NASDAQ down 0.4%. The Dow is up 0.5%. The 10-year Treasury yield at 4.4% and the 2-year yield at 4.13%. Amazon's annual Prime Day sale off to a slow start. The average household tracked by Numerator spent about $89 on that first day. Shoppers with high expectations for steep discounts because of those higher gas prices. Brands and merchants, though, struggling to meet those expectations because of their own rising costs. About 90% of Amazon Prime customers say they plan to shop the sale, but they will also look for deals on other websites. Amazon shares right now more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Bloomberg Businessweek Daily with Carol Masser and Tim Stinovec.
All right, Amy, thanks so much. Amy's setting us up so well, talking about oil. We do see prices across the globe falling as more tankers cross the Strait of Hormuz, and we've got some signs of progress in the U.S.-Iran peace talks. That really eased fears of an immediate supply crunch. A slide in energy prices kind of also helping ease those inflationary pressures. We'll get a read on inflation tomorrow, but yeah, it's definitely a different trend than we've seen as of late, certainly since the war started. Even
though oil prices are still up more than 20% year to date, they're down about 40% from their high during the peak of the conflict. A steady increase in traffic is adding to workarounds that were put in place to mitigate disruption through the Strait of Hormuz. All right, so we wanted to do a little bit of a deep dive into the energy market, what it means for prices today, going forward, and the risks that might be still out there. Dr. Ellen Wald is back with us. She's president of Transversal Consulting, senior fellow at the Atlantic Council, author of Saudi Inc., with us from Boca Raton, Florida. Ellen, good to check in with you. We have been, I feel like, since the war started, we've talked to you a lot. The lower price in oil in the benchmarks that we are seeing today, what does that indicate to you?
Well, I think it indicates that there's a lot of positive sentiment in terms of flows normalizing. And I think that's very much based on what we're seeing at the moment, which is this backlog, okay, that had been sitting there, both of Iranian oil, by the way, and tankers that, had been sitting there, or oil that was ready to be loaded, all coming out. And so I think that to equate that with this idea that flows are normalized is really probably doing a disservice to what the actual market is looking like. So I would say that probably prices are reacting to this maybe a bit more than they should. There's a lot of volatility. And so I think that we're seeing a larger drop than is indicated. So what's happening now is not necessarily what we're going to see happening, next week or in 2 weeks.
What do you think we will see happening then?
I think we're going to see a lot of difficulty chartering tankers, and I think that we're already seeing some evidence of this. The Basra Oil Company in Iraq is directing operators to shut down production because they can't get tankers in to load crude oil, because there's a great fear, and I think this has been evidence that ever since this MOU was signed and whatnot, of are they going to be able to get out? Like I said, we're seeing all of these tankers clear. We're seeing the backlog clear. And then the big question is anyone going to want to chance going back in and loading as they would? And I think we're going to see they're going to have to pay a lot more, to take that risk. And the question is really, is anything either available? Because a lot of tankers are engaged in other routes right now, because we have tankers taking, oil from the United States to Asia, to Europe. Are there tankers available? And how much are you going to have to pay to convince someone to go back into the Persian Gulf? And that's going to play out over the next couple weeks, potentially even a month, as it depends how long it's going to take these tankers to unload and figure out what they're doing next. But it could be a very choppy situation.
Well, I'm kind of glad you went there, because just because we do have progress in the U.S.-Iran peace talks, you kind of can't put the genie back in the bottle. And by that, I mean, Iran has showed its might and its ability to kind of bring the energy markets, global energy markets, to its knees, and that is by closing the Strait of Hormuz. And so until, I don't know, will anybody ever feel confident, comfortable that they can kind of go in and out of the strait easily? Or is there always going to be a little bit of fear now?
Well, look at, if you take what happened in the Red Sea as an example, then the answer is going to be no. We are not going to see a return to what we would call normal. The situation has forever been changed, particularly as long as this current regime exists with the capability to threaten the safe passage of ships, whether that means with drones, with speedboats and whatnot. If they if they have that capacity, there will always be the the concern that they will threaten this, and so it will either cost more, or we're going to see oil companies investing in workarounds. That's, I think, where the big push is going to be, is to not depend on maritime passage to get your oil out. And for some countries like the UAE and Saudi Arabia, that's much more straightforward. For Kuwait, for Bahrain, for Iraq, that's much less straightforward. And but there are options, and I think we're going to see them working on these pipelines. We're going to pipelines to outside to the Gulf of Oman, to the Arabian Sea, pipelines to the Mediterranean, Jordan, Syria, Israel, Egypt. They're all going to be major players in this, and it's going to change the way the region looks. It's going to change the distribution of wealth in the region. It's going to change the strategic importance of various ports. But overall, we will see, I think, it's going to become more diffuse. There will no longer ever be one waterway that accounts for 20% of the world's seaborne petroleum supplies.
Ellen, I want to connect all this. I want to connect all this to gas prices and what consumers are seeing at the pump. It's certainly important in Washington and important in congressional districts too. At the beginning of the year, it was $2.83 a gallon, according to AAA. Now it's at $3.93 a gallon. President Trump not happy about this. He said he's ordered the Department of Justice to look into gas prices, saying they aren't falling fast enough. He complained that big oil companies are not dropping their price at the pump commensurate with the sharply lower prices they are paying for oil. What's the relationship? Is there any fact behind his statement?
I would say there's very little fact behind his statement. This is not the time to start attacking big oil. First of all, a lot of these retail stations, are not owned by big oil necessarily, so they're not even responsible for the pricing that's going on. And yes, the vast majority of the price of a gallon of gasoline comes from the price of a barrel of oil, but that's not the only issue. And we've seen refineries running at full tilt, basically to supply gasoline, diesel, not just to the United States, but to other countries that no longer can buy it from the Middle East. So it's going to take a bit of time to shake through the system. We're going to have to replenish our stocks. These products have to get to the places where they need to go, combined with the fact that we're now in summer gasoline. Most of the country switches between a winter blend that we were seeing that was used, when this war started, to a summer blend, which is more expensive anyway. So when you look at things like inflation, when you look at the switch to summer blend, when you look at the higher demand that we see in the summer,
right.
Just saying that we are, $1 or so more as the average than we were, that's not really looking at the full picture. And I do think that the animus towards these companies is really very misplaced at this juncture.
Ellen, just really quickly, 30 seconds. You wrote Saudi Inc. back in 2018. It was all about the history of Saudi Arabia and the rise of the state-owned oil company, Saudi Aramco. We are 8 years, I should say, from that book. What would be the book you would write today, the narrative, just quickly?
It would be an oil company that is navigating a changing situation, probably changing faster than almost anything they've ever experienced before. And how are they going to preserve what they see as God's gift to Saudi Arabia? Maybe oil resources.
Maybe entitle it Slippery Slope or something.
That would be a good one.
Ellen, thank you. So glad you could join us. Dr. Ellen Wald, president of Transversal Consulting, senior fellow at the Atlantic Council, author of Saudi Inc.
Coming up next on Bloomberg Businessweek Daily, we got stocks on the move on a day when we're seeing equity markets really searching for direction. S&P lower now.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, folks, we are getting ready to take a look at some of the stocks on the move. Speaking of such, Qualcomm shares down about 6.3%. Some headlines crossing the Bloomberg terminal, I'm assuming coming from our team that are at their Investor Day event that is underway here in New York City, Tim.
Yeah. I'm just thinking about Micron.
Oh, you're going there.
Yeah, I'm always going to Micron.
Well, just with Qualcomm saying custom AI chips to get meaningful sales this year, but we are seeing, as we said, the shares extending declines to their session low, announcing a third generation AI chip targeted for 2027, says data center CPU coming in the second half fiscal year of 2028. You might recall it was just, was it this morning that we got a confirmation that they are buying the AI chip startup Modular, which we had actually talked about here at Bloomberg back on June 22nd. So a couple of days ago, there was some rumblings of that. But nonetheless, we did get this morning confirmation of that. So there's a lot going on. But again, we've got shares of Qualcomm folks pretty much hovering near their lows of the session. So that stock, well, actually bouncing back. Now it's just down about 4.8%. But
I might have to update my
6%.
decliners for Qualcomm.
It's always a moving thing. Hey, also we want to just flag for you, Treasury 10-year yield falling 10 basis points on the day to 4.396%. Man, I was looking in earlier today. We did see along the U.S. yield curve, we did see yields moving down just across the curve. Right now, again, 10-year note at 4.398, 2-year note shorter end of the yield curve, 4.13. So we have seen yields move down a lot. On this
In the
Wednesday.
longer end, the 30-year 4.854, still down 9 basis points today.
So interesting trade here, and as equities kind of kick around. I'm Carol Masser along with Tim Stanovic. Let's get to some stocks on the move. Back with us is Avalon Purnell. She's Bloomberg News U.S. equities reporter. Where shall we begin?
Firstly, where's the beef? We have to start off with Wendy.
Nice. I like it.
That's ticker WEN. It's currently going up more than 28% most intraday since 2020. And that's as the fast food chain seems to be getting the meme stock treatment, to say the least. Earlier today, there was a Reddit post asking members to save Wendy's before it's too late. And we are now seeing exactly what that saving Wendy's looks like.
So that's it?
What does that mean? Like, what do you do
It's a
with
good
that?
question.
Do you trade off of that? I guess so.
I don't.
I don't.
You don't. You don't. But maybe some people are.
Listen, you know, what's interesting is stock is down about 4% year to date. Almost 32% of the float is short. So there's been mega negative sentiment. And I'm just thinking, if you were short and all of a sudden the stock took off, maybe you're doing some short covering. But nonetheless, it's not even quite an $8 stock, just below it.
Well, there's another company that for a time period a few years ago was a meme stock that's also moving big time today, and that's Hertz. Why is Hertz moving?
Yes, that's ticker HTZ, not moving in the right direction, currently sinking about 38% most intraday on record. And that's after the car rental company offered a warning about its profits, saying that it's now going to be on the lower end this coming quarter as softness in the used car markets really is hitting them hard. And their reaction to this problem is also driving the sell-off today. A lot of people were taking a pause, to say the least, after they said they're currently planning to offer $100 million in stock alongside a $300 million offering of convertible payment in kind notes. So, to say the least,
Ouch.
Not looking great.
Again, it's a $3 stock.
Yeah, I mean, this one has been all over the place over the last few years. There was the whole Tesla tie-up that a lot of people were really bullish about. Then it turned out it didn't work because the people didn't want to rent Teslas because they were difficult to charge. They had to offload all those cars. And then when the price of used cars was going up because new cars were so expensive, it was doing very well because they're such a big seller of used cars. So it's been, the story has been really all over the place over the last few years.
I have to say I had an opportunity to, when a rental to do an EV, and I was kind of like afraid to do it because I was afraid, like, what if I can't plug it in? What, you know, and I wanted to, but I just didn't go there.
We got a hybrid recent. Well, it was like a year ago actually at this point, but it was a plug-in hybrid.
Yeah.
And I couldn't. It was at zero when I rented it, so it was just using gas, and I was eager to use the plug-in part. And the cord it came with wasn't long enough to plug into any of the outlets where we were parking it.
So it went really well.
So we only used the gas part of the hybrid part.
All right, let's go to a name I'm not really that familiar with. Ticker is ABSI.
Yes, that is ABSI, currently up about 38% to hit its highest intraday level since 2021. And that's after the AI drug discovery company had to bring in some AI today, released early data for its experimental hair loss drug. Hair loss, at least from what we are hearing from investors, could be the next thing that people are thinking could help take over, like the obesity.
Just talk to Tim Stanovic about the importance of hair loss.
Well,
this poor guy got killed.
You give me such a hard time.
No. It was at a planning call, and it was like Tim and a ton of women on our team, and we just were like, all right, just shut down. We're waiting for more money, you know, on women's health issues.
Well, I was basically saying what you were saying, which was a lot of analysts have said, what is the next sort of golden goose after the GLP-1 fades from the pharmaceutical companies?
Men's hair.
That's what some analysts are saying.
You're absolutely right. I mean, we have
Thank you,
Veridermics,
Avalon.
we have
You can come
Cosmo
back
in
anytime.
Europe. There's definitely a lot of different
Avalon.
companies that are having a lot of data for this as well.
All right. That'll be your last
Actually,
time. No.
Avalon, you can stay for the next 2 hours.
Masser can leave. I can totally feel it. Avalon Purnell, thank you so much. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers. Find it on Apple, Spotify, anywhere you get your podcast. I want to protect your head of hair. I just want to put that out there before I get all this hate mail. Hey, coming your way, the close on Bloomberg TV.